The path to meeting guidance. This is a due diligence on Palantir's company and revenue growth. Reading through my DD posted on Reddit for convenience. The too long didn't read. The number of contracts Palantir gets is very important. Based on current knowledge and known trends, Palantir currently has either around 180 customers or 161. With their multiple of 8.1 million average a customer, or 2.025 million a quarter, their revenue for quarter 2 is estimated around 363 million, which is almost exactly guidance. The number of contracts we would like to see for the full year is at or around 175 customers to meet guidance of 30% plus growth year over year. Palantir started with 139 customers from 2020 and is now at worst 14 contracts from meeting their top-line revenue growth target. The price of the stock can easily go up and down during this time, but as long as the company is doing great, the stock price will follow eventually. Disclaimer: I would like to mention that the $2.8 billion total remaining deal value listed on page 30 and the $5.4 billion total remaining deal value that includes the IDIQ awards confuses me. The IDIQ award refers to the value of government contracts where the funding of such contracts, also known as indefinite delivery, indefinite quantity, IDIQ contracts, has not yet been determined and is not guaranteed. This was page 20 and page 30 of the investor report linked below. I'm not sure what to make of either of those things, and I only teach music to children. I am not in finances. This means I may be more than a little wrong on how much the value is on that front, but the bull thesis can remain the same. Just take it that the $2.8 billion I used with a grain of salt. Companies that partnered with Palantir that may not generate revenue for Palantir anytime soon include Clefairy, MD Anderson, Cellularity, Mediascope Group, and Roivant. Contracts since April 4th, 2021, which should be reported on quarter 2 for 2021, include the UK government at $1.66 billion for 31 companies, the USCG, which is $6.25 million, which ends on 9/5/2021, the USASA, which is $9.98 million, which ends on 4/20/2022, Ringier, which has not reported a revenue, the US DOJ, $1.51 million, the US SEC, $6.5 million a year, the US Air Force, $32.5 million expected to be completed by the end of the year, US ICE for $6.85 million ending this year, the UK Royal Navy, which is not listed their contract value, the Austriac or AUS contract is worth $227,000, and the CDC has a $7.4 million which ends in March of 2022. You can see the table form below if you would like to look at it in table form with the price being divided into quarters and the amount they should be paying per quarter, as well as the total estimated contract value down below, along with the average among all 11 companies. You can see a much nicer table in the link in the description below. Some stats: 341 million quarter 1 revenue, 8.1 million average revenue per customer. 341 divided by 8.1 equals 42, and that can't be right because Palantir had 139 customers for 2020, so we're taking the 8.1 million that they make for the year, divide that by 4 to get their quarterly income per customer equaling 2.025. Quote, as of December 31st, 2020, our platforms were used by 139 customers, including some of the largest and most significant institutions in the world, end quote, based off of their filings on page 5, which is linked below. Stated 7.9 million average for 2020 and $1.093 billion total revenue. $1.093 billion divided by 7.9, which is their average revenue per customer, equals 138.35. Looking at that, we can extrapolate on this idea since this is essentially the 139 they reported earlier. The probably wrong bull case. 341 million, which is the quarter 1 2021 revenue for Palantir, divided by 2.025, or the average revenue per contract, equals 168 or 169 customers as of quarter 1, 2021. Palantir states on their quarter 1, 2021 investor report that the number of customers added is 11 for the quarter, meaning 169 customers is likely too high. This was based off of the investor report on page 31, since 139 plus 11 equals 150. Customers added in quarter 2, 2021 that we know of are 11. 169 plus 11 equals 180 customers times 2.025, giving us 364.5 million revenue for quarter 2. A different interpretation. The original customer base was 139 for 2020. They state the new customers as being 11 potentials for quarter 1. This means quarter 1's new customers was 150. 150 times 2.025 million average per company gives us 303.75 million quarter 1 earnings. Quarter 1 revenue of 341 means that we are missing 37.25 million between the number of customers they have stated and the total revenue they reported. They have 2.8 billion in total remaining deal value. This might be where they got the missing quarter 1 revenue. This would be extra money awarded by current customers and contracts. They could also get more money upfront on new contracts. They could also have acquired some customers we don't know about. But basically, the reason it is different is up to speculation. Assuming they get 0 new contracts for the month of June and get the same 37.25 million again for quarter 2, we can take a good guess as to their revenue for quarter 2. 150 plus 11 new customers means 161 companies times the 2.025, giving us 326 million. 326 million plus the 37.25 million gives us a total of 363.2 million. Where does this all line up? Based on the link from CNBC that's down below, they quote, Palantir said it expects to bring in 360 million in revenue in its second quarter compared with the 344.3 million expected in a Refinitiv survey of analysts, end quote. I think this is more than reasonable and likely beatable based on information we already have. Based on the companies they signed with, their average deal value may even go up. The average quarterly revenue from the contracts we know should be 2.84 million a quarter, and if we use all 11 contracts, their quarterly average is 2.32. That's the quarterly total from 9 companies, being 25.6 million, across all 11 contracts. Let me rephrase that. The quarterly average is being based on all 11 contracts, but only 9 revenue streams, which are the ones we know, are being added in to make 25.6 million divided by 11, giving us 2.32. That average is higher than the current average and is being sandbagged because we don't even know the 2 contract prices that are included in the 11 companies we divided it by. I could see Palantir posting 8.2 million average contract values for quarter 2, but that is an overly optimistic for a future forecast, so I won't do that. Assumptions for the number of customers Palantir needs to meet guidance. On screen, there is a table which outlines the total revenue that Palantir is estimating, which is greater than 30%, as well as the number of contracts they would need if they have an annual revenue per contract that goes from 8.1 up to 8.5 over 2025. The whole spreadsheet is linked below where you can see it much easier. If Palantir holds the 8.1 million revenue per customer per year, we see they only need 175 customers this year to reach their 30% guidance. Note, this would be all 175 customers paying from quarter 1, which likely means they need a few more than 175 to meet guidance, but due to their explosive growth already, they may be fine with 175 by the end of the year. With 7 months left in the year, including the 25 days left of June, we only need 14 more customers based on the second analysis to reach the full 2021 guidance numbers minus the note above. We are certain of 9 new paying customers in quarter 2 2021. It is likely that we are at 11 in quarter 2 already. I have not dug enough to know which contracts were merely extensions, though. I grabbed all of the contract information from the link in the description below. That is the Palantir collaboration/contracts database and updates. I also used Google and Palantir's website. Contracts moving forward. To safely evaluate the future, I will presuming we will have slower growth of contracts for the remainder of the year. It is much safer to lowball than shoot high and be wrong. I will also be lowering it for the fact that contracts acquired in quarter 3 are effectively half a contract, since they will only pay half the fiscal year, and quarter 4 contracts will be paying for 1/4 of the fiscal year. Contracts per quarter estimated for quarter 2 through quarter 4 2021 are as follows. Quarter 1 was 11. Quarter 2's estimated, I have at 12. Quarter 3, I estimate at 7. And quarter 4, I estimate at 6. If customer acquisition slows that much moving forward, we can expect the customer count at the end of the year to go from 139 in 2020 to 174 by the end of fiscal year 2021. This is very close to in line with this article written by Market Realist on May 11th, 2021, linked below. They state, quote, Palantir reportedly has 149 customers in both the government and commercial segments, end quote. Palantir's quarter 1 investor report also states, quote, we added 11 new commercial customers, end quote. That was based off of the investor report, page 31, linked below. Some things I had overlooked and want to share. Quote, in quarter 1 2021, our total U.S. revenue grew by 81% year over year, and commercial opportunities in the U.S. and the U.K. have increased by 2.5 times since February 2021, based off of their investor report, page 12, that's already been linked below. That same slide says active commercial pilots have more than doubled, which is very conducive to having enough customers to meet my projections in the future. Don't forget, they tend to have a 3+ year acquisition with their customers. This means they may not make money from them for a while. Palantir is likely being used in many more than just the companies we see. As the report on page 31 of their investor report, in the small print that's also linked below, they quote, average revenue per customer is calculated as total revenue for the trailing 12-month period divided by the number of customers from which we recognize that revenue. Remember CARP unlocking data for free? Giving out free samples? I'm pretty sure at least a few companies are trying that, and that's pure speculation, not facts. But basically, it says that if they are trying it for free, Palantir is not counting them as a customer because they're not paying them yet. Extrapolating potential for the full year. Probably wrong bull case. 341 million from quarter 1, 362.5 million from the bull case 1 for quarter 2. Quarter 3 adds 7 contracts to make 187 total. Multiplying the 197 by 2.025 gives us 378.6. And quarter 4 adding 6 more contracts, giving us 193 in total, giving us 193 times 2.025, giving us 390.8 million for the quarter. 390.8 plus 378.6 plus 362.5 plus 341 equals 1472.9 million for the annual report. This is a 34.6% revenue growth year over year if they're able to grab 13 new contracts based on this valuation. Case number 2, the different interpretation. 341 million from quarter 1 with 150 customers, then leading to a 363.275 for the second bull case for quarter 2, giving us 162 customers. Quarter 3 equals 162 plus 7 new contracts, giving us a total of 342.2 million for quarter 3. And if Palantir gains 7 customers in quarter 3 to 169 and still averages 2.025 per customer per quarter, quarter 3 is 342.2 million without any additional bonuses, such as what I added to quarter 2. I don't think revenue will go down, but we are trying to project the future here, so it's better to play it safe on assumption, so I won't add the remaining 35 million basically. Quarter 4 then is 169 customers plus 6 more, giving them 175 customers total, multiplying that by the 2.025 times, and we get 354.4 million for quarter 4, which is below my own assumptions. Adding all of those quarters together gives $1,400.9 million, which is a 28.2% increase year over year, missing guidance by about $20 million. Based on current assumptions, I'd say my quarter 3 and quarter 4 numbers are so easily beaten I scare myself with my optimism. This is how easy it is to add $37.5 million to quarter 3 and quarter 4 as I did with quarter 2, and boom! We beat the 30% guidance by 5%, a 35% year over year revenue growth with $1,475.9 million in revenue. A bunch of final thoughts. There's likely to be a report of somewhere between 175 customers and 193 or more customers at the annual report for Palantir. Palantir has stated that they are a seasonal company bringing in larger profits in quarter 3 and quarter 4. This may be changing as their contracts were changed a while ago to show a more consistent revenue stream. My goal here was to show you how every contract they tell us about matters. I want each individual to understand the top line of this company grows greatly, even with the smallest of contracts. I want you to understand how easily Palantir is making it look to achieve their 30% revenue growth target. I want you all to understand that Wall Street can do whatever they like to the share price, but the company is looking as strong as it ever has. Remember, if you are long-term oriented, there will be a time when Wall Street cannot ignore this company. I think right now our share price is fairly valued, but that doesn't mean I don't think it will go up or down a bunch. Just about every stock has a giant growth swings. I'd say 25% up or down swings are far from unheard of. Final thoughts. Looking at what Peter Lynch has said, I highly recommend going to the YouTube links below, and if you just want the 2 little clicks, there should be linked to exact times where he is talking about this. But I will paraphrase Peter Lynch with some comedic facts in the financial industry. He quotedly, paraphrasedly said, 50 declines of 10% or more in 93 years. Once every 2 years, the market falls 10%. 15 have been a decline of 25% or more. If you like a stock at 14 and it goes to 6, that's great. You understand the company and understand the balance sheet and what they are doing, and you're hoping to get to 22 with it. 14 to 22 is great. 6 to 22 is exceptional. Stocks are not a lottery ticket. There is a company behind every stock. End quote. Once again, this is paraphrased. Continuing on, he also has some things of note as he mentions a company titled Polaroid in the same video at around 23 minutes and 28 seconds. He talks about if it gets below 100, it's a buy. Then it went to 18 within a year, and then Lynch states, quote, the company was just that overpriced. It went down. End quote. He later talks about Kaiser Industries and how it went down like crazy from 24 to 16. They buy at 16 and eventually it went down to 3. The company went up to $50 a share. But if you didn't know the company, what would you do if the stock goes down like that? Listening to Lynch, he speaks from experience that if you don't know that company, you're going to sell. Be careful of not knowing the company and the numbers behind it. The final thoughts. Last takeaway is due to my studying of the company and my timeline. This is my highest conviction play. The company is set to continue its growth path, and as long as the company continues to grow, eventually the stock price will follow. The total revenue is not the only thing to look at when evaluating a company, but for the purposes of most of my DDs, linked below, on Palantir, revenue is my sole focus. I trust them to eventually be non-adjusted net positive in cash flow, and you yourself should look at their cash flow and margins besides just reading or listening to this due diligence. You should look into what the programs they create do and how they make the money that they are. For anyone wanting a price target, you should realistically math it out yourself. We have had a price to sale or revenue to sale ratio from 28 when we crashed down to $16 a share, and as high as $70 or 70 price to share ratio when we were soaring over 40. To do it, take your total revenue, 14.20 million or whatever you decide to pick, divided by the shares outstanding, which is about 1900 million or 1.9 billion, and then take that and multiply it by your PS ratio or your price to sales ratio, which if you do anywhere between 28 and 70, you should be fine. This should give you a price target of anywhere between 20.9 to 52.3. Do remember, guidance is at least 30% growth. Thanks, Papa Carp. I'll pick 41% growth year over year and a 34 times sales multiple because I'm a bull, and that's total revenue of 1540 and a price target of 27.38. Lastly, if you aren't sure what sales multiple to use, you can look at the last link below, which is another one of my DDs going over this exact thing.